As I make this monetary policy statement, we can derive satisfaction from the fact that the Indian economy and the financial sector stand out as strong and resilient in a world of unprecedented headwinds and swift cross-currents. Unlike the previous 3 tumultuous years, the uncertainty on the horizon appears comparatively less and the path ahead somewhat clearer. But we have to be acutely aware that the geopolitical conflict continues unabated and policy normalization globally is far from complete. Headline inflation across countries is on a downward trajectory but is still high and above the targets. Labor markets in many countries are tight and demand is rotating back from goods to services. Hence, central banks across the world remain on high alert and watchful of the evolving conditions, even though many of them have tempered their rate hikes or even taken a pause. Financial stability concerns persist in advanced economies, although they appear to have been contained due to resolute actions. Retrenchment in trade, technology, capital flows caused by geopolitical fault lines and economic fragmentation further complicate the situation. In these challenging times, the Reserve Bank of India has continued to focus on preserving price and financial stability, while ensuring adequate flow of financial resources to all productive sectors of the economy. As a result, domestic macroeconomic fundamentals are strengthening. Economic activity is exhibiting resilience, inflation has moderated, the current account deficit has narrowed, and foreign exchange reserves are comfortable. Fiscal consolidation is also ongoing. The Indian banking system remains stable and resilient. Credit growth is robust and domestic financial markets have evolved in an orderly manner. Let me now turn to the decisions and deliberations of the Monetary Policy Committee. As many of you would be aware, the Monetary Policy Committee met on 6th, 7th and 8th June, and based on an assessment of the macroeconomic situation and outlook, the MPC decided unanimously to keep the policy repo rate unchanged at 6.5%. Consequently, the standing deposit facility, that is SDF rate, remains at 6.25%, and the marginal standing facility and the bank rates, they stand at 6.75%. The MPC also decided by a majority of 5 out of 6 members to remain focused on withdrawal of accommodation to ensure that inflation progressively aligns with the target while supporting growth. Let me now explain the MPC's rationale for these decisions on both policy rate as well as the stance.